Big news this week coming in from Amazon, Google, and Microsoft, and the US labor market has got the portfolio down on the week, leaving the big question of is this a good buying opportunity, along with Trump's tariff talks rekindled and more. So we've got a lot to cover. Let's dive straight in. Three of our biggest positions in the portfolio announced earnings this week, being Amazon, Google, and Microsoft. The stock market clearly did not like something about these guys, with Amazon being down 3.54%, Google being down 6.69%, and Microsoft being down a lot more, closer to 409 now, but in the screenshot down 0.56%. So that leads to the big question, why are all three of these stocks looking like an absolute dumpster fire right now? One of the big things we look for on these earnings report is earnings per share, or EPS. Amazon beat expectations, Google slightly beat expectations, and Microsoft beat expectations as well. Another thing we like to look at is revenue. Amazon's in line with expectations, Google fell a little bit below expectations, and then Microsoft was above expectations on revenue. So between those two things, if everything looks good except for Google being below expectations in revenue, what would cause such a significant drop? Most of the reason being, if we take a look at their capex, which is kind of how much they're projected to spend for 2025, all of these companies came in relatively higher than what analysts had expected. This comes due to all three of these companies taking a big bet on AI and AI infrastructure. So why would it drop? Just a few months ago, if you were to say anything about AI in an earnings report, your stock would have absolutely jumped, and you'd be hearing news all over about how this company is jumping in on the AI boat and it's such great news. One of the main factors is the high cost and uncertain rewards that come with the AI. It hasn't really been fully monetized yet, and a lot of the market is still skeptical on whether or not we're in a bubble. Personally, I see this as a good thing. We're looking at three of the largest businesses in the world who have some of the smartest people on their teams. And all three of these companies definitely have some sort of risk management team that's looked at outcomes on this and seen what could cause them to go under, and yet they still took the risk. I feel like this is one of those situations where they looked at the outcome and said that the cost not to jump in on the AI would far outweigh the cost that it could possibly be if the AI were to pop. That being said, the three companies I really bought into heavily this week were Amazon, Google, and Microsoft. I snagged 3 shares of Amazon, 3 shares of Google, and 2 shares of Microsoft. And the reason I'm still believing in these companies is the fact that they're still taking risks. I would be more concerned if they weren't taking risks and just trying to maintain what they have. It's these type of risks that allowed the companies to get to where they're at today, and without these, they definitely wouldn't be anywhere close. So if they want to try and get returns like they did in the past, they're going to have to take risks like this. If not, the stock will probably just trade flat or barely go up. Yes, they all have great business models already, but risks like these are what allowed them to explode in the first place. Next up, the return of Donald Trump to power has rekindled enthusiasm for tariffs, supported by claims that tariffs will boost the economy, don't cause inflation, and are paid for by foreigners. Economists here largely disagree, but early evidence suggests tariffs do raise prices, hurt growth, and burden Americans, while also inviting retaliatory measures that harm exporters. And if I'm looking at it just from a basic standpoint, the way I see it's that the US government charges these foreign entities to import stuff to the US, and most of these foreign entities will just raise the prices, which will end up going back on the American people to pay for those higher prices, which will in return pay for the tariffs. The main thing that I do kind of like about tariffs, though, is the competitive advantage it does give to local companies in the US. With tariffs charging these other foreign companies, it causes them to have a higher price, which could allow for US companies to shoot for a lower price and hit the American consumers a little harder. So for now, I think this is just a double-edged sword that we won't see the repercussions of for at least a few years. But it's definitely something I'll be keeping my eyes on for the near future, as I do think it'll have a significant impact on the US markets. As I'm sure you guys already know, I'm down $124 in the brokerage account and $268 in the Roth IRA, which definitely sucks because that means the market did gain back some ground on us. But I'm personally expecting a strong recovery out of these tech stocks, which will definitely jump us way over where the market's trading. Our portfolio balance at the end of last week was 42,590. Our portfolio balance this week is 42,266, leaving us with a total loss of around 330 bucks. If you did like the content, please don't forget to like and subscribe for a donut. See you in the next one. Peace out.